Hi folks, this is Steve from Digreshka.com. This is a video on trade management. It's going to be a straightforward video about very important concepts in trade management. Concepts that are fairly easy to grasp and also easily misapplied. On to payout and win ratio. Strategy is one of the pillars of being a successful trader. A thoroughly tested strategy with a reliable positive outcome is a must in every trader's toolbox. Your trading strategy should include your expected win and payout ratio. It's also important to note that once you begin trading, it's totally possible to start off with losing trades that dilute your initial investment. You will need, in effect, more profits to restore your account to an original investment balance. We've created the slide computing the amount of return needed to make up for having an initial account drawback. But for now, it helps to keep in mind that a helpful remedy to this dilemma, a neat trick or solution that works, if you will, is to trade smaller first to accumulate more profits and then trade with the actual plan size later. This boosts your confidence in trading as a newbie, and should you happen to have losing trades straight from the start, you need less time and effort or wins to recover your initial investment. A simple mathematical truth that is often overlooked is that much is needed to recover from account drawbacks. Figures on account drawbacks and the profit you need to generate to merely recover are presented on the next slide, but before we go on, might I add that aside from the normal risk of loss from proper trading, much of the drawbacks are caused by misbehaviors in tradings, such as tweaking a tested strategy and or increasing trade size, thereby accepting even more risk than before. It's okay to tweak a strategy if you know exactly why your rules need to be tweaked and what needs to be tweaked. It is okay to increase your trade size after careful consideration and awareness of the effects of the new trade size on your new account balance. But the moment you try to make up for your losses by simply changing your tested strategy for unobjective, unidentified reasons, you're either playing with the happiness or overconfidence from winnings or trying to make up for losses, thinking that the next trade must win. And that is just no guarantee that one follows the other. The first column of this table shows the percentage loss suffered in the account. The second column shows the percentage of capital left from the initial investment of 100%, and on the third is how much percentage profit you need to generate from the remaining balance on the second column just to get back to your start capital. Because obviously the capital left is the money that you are left to trade to generate returns. And while you are not back to 100% of invested, you are negative. If you can examine the table, you will notice that 5% per trade is really kind of the upper limit that one can ever afford. The healthiest is to risk 1 to 3% per trade to avoid account destruction. Can you imagine, on the other hand, putting 10%, for example, on the table and having to generate 11% from the remaining capital after a drawback? Or even having to make a fourth or 25% of the account just to have beginning trading capital back just because you risked 20%? The rest of the figures are just horrible, but it does happen when traders are desperate or uncanny enough, and they mostly don't end well either. This is a very simple topic, but it's often violated. That's why we go the length to show you how exactly these numbers work for you. Finally, to end the video, remember to keep losses small. Implement stop losses and avoid destroying your hard-earned money. That means risking 1 to 5% per trade as max risk. Number 2, trade on and trade consistent to your tested strategy. If you stop after a drawback at the beginning, you don't give your strategy and statistics a chance to work out for you. Remember Bernoulli from LLN, Law of Large Numbers? Number 3, trade on and trade consistent to plan to compound and grow your account. Number 4, planned losses are business costs, as long as you traded according to plan. Number 5, trade small is always relative to account size. That's self-explanatory. And lastly, if you're starting a strategy live, keep it small and keep your account alive.